market. That'll be their answer, right? And your life savings is gone. That's a risk that we're taking. Then there's bankruptcy risk. Like say you even go and invest in companies and institutions, and you're like, no, I'm not giving it to a broker, I'm putting it somewhere nice. Those institutions could go bankrupt, right? Or could fail. I mean, it was a great idea to buy commercial real estate in the middle of New York, and it was just an absolute surefire bet. Nobody would have disagreed with that until May of 2020. You know, February 2020, the best thing you can do is get yourself a commercial real estate building in New York. May of 2020, that's a horrendous idea. You just lost all your money and you went bankrupt. Like that, because the world changed so quickly. So we're taking that risk. So we're going to put our money somewhere, they're going to go bankrupt. We're taking a jurisdictional risk. It's like, I'm Russian, great, all your money's gone. That's the truth, that's the world we're living in. You're Russian? Sorry, we're just going to take all your money. Oh, you're a Canadian and you're donating to some cause which we don't like? We're going to take all your money. In Canada. That's the jurisdictional risk we're taking, okay? And there's a lot more risk, but I just want you to understand the risks that we take in the traditional financial space, and we think it's safe. We think a bank is safe. Speak to somebody who was there in 1930 and ask them how safe the banks are. You can't speak to somebody who was there in 1930 because they're dead, right? Or they're old enough that we stopped listening to them. But they went through this, where they lost all of their gold. The US government one day just went, it's illegal for you to own gold, and we're going to take all the gold. And you're going to bring the gold from your house and give it to us too. You can keep a few ounces, but we're taking all the gold. And then that happened in the French Revolution, and that happened in the American Revolution, and that happened in the Roman times, that happened in Chinese times. It's just how history has played out. There's these times where everything's safe, institutions are safe, we all love them and trust them, and then they work, and then the next generation comes and they work, and the next generation comes and they kind of work, and then the fourth generation comes and those institutions are gone to shit. And our parents are like, no, they work, banks work, you should keep your money in the bank, it's safe, you should keep it in stocks, it's safe, you should put it into real estate, it's safe. But the fourth generation is living in a different world than the first three generations, therefore that narrative doesn't play out. Okay, again, historical cycles talk, I'll do it again, but that will define this in much more detail. So these places that we consider safe are not safe. If you have $1 million in your bank for the last 2 years, you lost between 40 to 80% purchasing power depending on which numbers you look at. You got $1 million, 400,000 was taken from your account, but the number still looks like it's $1 million because they printed 40% of the money supply in certain jurisdictions, therefore they took 40% of the money from you. If you have money in stocks and you thought Facebook, Netflix, Google, Amazon, those were the safest places to keep it, you've seen how that's gone over the last 4 months, 5 months, right? So the places that we think of as safe are not safe. We think real estate is safe. Do you even own real estate? You know who owns real estate? The country where the real estate is. The Russians owned real estate until they didn't, right? Until somebody just went, oh, we're just removing your name from the register. Sorry, you're Russian, right? But some guy over there said, we're removing your name from the register from globally, and we're removing your name from the register. So those things that we think of as these like safety hedges are not actually safe. They come with inherent risks which we don't understand, and we will only realize them when the system goes to shit. So what happened within crypto? Remember, there's the debt ocean, there's the stock sea, then there's a little puddle called crypto, and your little crypto's inside of that little puddle, right? What happened in 2020 in crypto is that liquidity, that money printing, that money was printed and given to the wealthy. That's how it goes. The guy who's actually, like there's literally a computer. There's actually a computer with an SQL server basically set up on it that they go into and type in how much money needs to be printed, and they send it to the banks, and the banks have their own computer where they type in their own fake money, and they hit enter, and it gets generated the moment somebody wants to take a loan. Okay, that's how money is created. But the first people who can get the easiest access to that money are the rich people, because wealthy people can get loans easily, right? So that money was printed and handed to the elites of the world. Those elites pumped it into stocks, pumped it into real estate, bought up, giant swaths of countries under these funds, and they pumped it into crypto, right? So what they did is, us, the crypto heads, if you've been here for some period of time, we know the 4-year cycle. We're like, great, 2013, 2017, 2021. That's where the peak's going to be. We know that. That's how the cycle goes. They went, oh, you know that? Great. 2020, let's pump it. You know, pump it. Like the Bogdanov brothers would say. But it's like, yeah, they just took that money that was printed and they pumped into this market and they pumped it early. And then we come along in 2021 like, I heard a lot of people are getting rich over here. Yes, please. And they went, yeah, no problem. Here, we're going to write it up to 70. We're going to go from 30 to 65 to 30 to 70 to like nothing, right? And you can make all the money you want in the process. This is another thing Wall Street does. When you know something, and Wall Street knows you know something, expect that they're going to pull the rug out from underneath your feet. Because if you know something, that's not the truth. If any of us know something, that is not the truth. As a matter of fact, the truth is probably the exact opposite of what we know, right? So when they know that we know that the cycle is going to top into 2021, they go, great, you know the cycle is going to top in 2021, we're going to pump it early, that's going to give you the FOMO to really blindly get you to jump into this place without understanding the risks. So that's what they did. They front ran the market. And they left in May. They left in May of 2021. We could see it on the on-chain data, right? And then the rest of us have been playing the game from May of 2021 until now, which has actually been the crash. But you couldn't realize that unless you have the data, unless you have a visualization or a mental model of how the world works and you understand these dynamics, right? The other thing they did, though, is they started DeFi. 2020, they came in and they said, guess what? You know those old financial products? Those are based on institutions and they're controlled and you guys hate that, you guys like freedom. We went, yeah, we love freedom. And they went, great. We're going to create decentralized finance, DeFi, right? And decentralized finance is simply the idea of like the same products that exist in the financial world, futures, derivatives, ETFs, places to be able to lend and borrow, earn yield, and we invented new ways of doing it, staking and stuff. But basically, we're just going to set it up on computers. Instead of institutions doing it, we're going to set it up on just computers randomly across the world, and that's what we call DeFi, decentralized finance. It's basically blockchains are a bunch of computers that are running across the world that are not controlled by one person. They set up the system and went, here you go. And we went, great. What do I do with it? They said, we'll give you X amount of yield. We're like, what's a yield? They're like, interest. Cool. So you're going to give me how much interest? 80,000% interest. And we went, yeah, that sounds great. I'm trying to get rich yesterday, right? So that sounds great. That's how I get rich yesterday. So please, here's my money. Give me 80,000% returns, right? What actually happened is we don't understand what the thing does, right? We don't understand what DeFi does. What DeFi actually does is it takes money from some people and gives it to people who understand it better. That's what DeFi actually does. Because when you're investing into the space, please ask two questions. What does it do? And you better be able to answer that question within one sentence. Maybe two sentences if something is it's like some complicated shit, but what does it do? Where's the money coming from? That's the important part. What does it do? Okay, great. I need to conceptualize what it does. I don't need to be like a techie. Like I don't need to know how exactly this works. I just need to know what it does, right? But where's the money coming from, right? Because we're going in to make money. Whose money? First of all, you don't make money. You take money. The guy typing it in the computers is making a fake version of money, but the person literally, giving services and building goods and improving people's lives, that's the person who actually makes money. We take money. So whose money are you taking? And where's the money coming from? And if you can't answer that question, it's coming from you. That's the rule of crypto. If you can't answer the question of where the money is coming from, it's coming from you, right? Again, we didn't understand that. So what we did is we put our money into going, yeah, 80,000% returns, please, right? So then, as it always happens in crypto, a bunch of projects came out. All of them have these great ideas about like, hey, we got this new product. We're taking the money, we're putting it here, and then you earn these coins, and you put them here, and they do this, and it's valuable. But we went, great. I don't understand that either, but give me some of that, right? So the entire DeFi sector got built out in 2020, and all that fake money that they printed, that they pumped into the markets, they pumped it into DeFi, and they pumped it into all these things. We came in 2021 chasing the DeFi train and wanted to get in ourselves. So we went, and we bought Lunas and a bunch of coins, which we were like, this is great. Luna comes along and goes, hey, I'll give you 20% on your dollars forever. And nobody went, how? Like, where's the money coming from? I did. A lot of people did. They were screaming on YouTube, like, where's the money coming from? Most people went, 20% on my dollars. That's great. I keep dollars over here and I'm going to yield 20%. So here, I'll give you the dollars. A bunch of these DeFi protocols came out, and they were promising you returns from different places. And when the market's going up, and there's all this liquidity being pumped into the markets, you do make money because there's money coming in, right? What's happening is there's money coming in from the bottom, and that money is being fed up to the people who are leaving. That's a Ponzi scheme. That's exactly how Ponzi schemes work. As long as there's money flowing in, the thing works. As soon as the money wants to flow out and there's not enough money in the system because there's no actual money there, the system collapses and disappears. So that was the idea of DeFi. DeFi was this idea like, okay, you put in money, we'll do some complicated stuff with it, and we'll give you a return. That already crashed in like 2021. And we were like, this is a Ponzi scheme. And most of us in crypto, we already knew that was a Ponzi scheme. We're like, where's the money coming from? We don't know. It's a Ponzi scheme. If you want to participate, and if that's your jam, do it. Otherwise, don't. At the end of last year, they were like, no, we have something new. It's called DeFi 2.0. It's the new and improved DeFi. We figured out a way to DeFi better. And I was like, where's the money coming from? They're like, it's a new place where the money's coming from. And then they're like, buy time, buy Wonderland, 80,000% returns. And literally people came to me, they're like, should I invest 80,000%? I was like, give me the money, I'll give you 80,000% returns. They're like, no, hell no. I was like, why? They're like, because you're gonna scam me. I was like, right. Now you're gonna put it into a computer? What do you think they're gonna do, right? But anyways, that happens. What are the risks of that, right? When we're talking about this space, the DeFi space, what are the risks of it? Remember, the centralized finance space has the risks we just talked about. The decentralized finance space has even more risks. Okay, first of all, they're not doing anything for the world. The way real value is generated in the world is you gotta do something to improve somebody's life enough that the person's willing to pay you for that. That's value. If you pull something out of the ground and you give it to somebody and go, look, this is valuable, and they pay you for it, that you're adding value to their life enough that they're paying you for it, right? That's the only value generation mechanism in the world. Making money is not a value generation mechanism. It's actually, anyways, I'm not gonna go down that rabbit hole. So with DeFi, it's like, okay, I'm gonna take my money from the bank, I'm going to turn it into, first I'm gonna on-ramp it into an exchange, I'm gonna turn it into a crypto, probably gonna turn it to stable coins first, and then I'm gonna buy crypto. And I'm gonna take that crypto, and I'm gonna put it inside of a system, let's say Ethereum ecosystem, and then I'm gonna put it inside of this protocol that's built on top of Ethereum. It's an app built on top of Ethereum, and I'm gonna lock it in there, and lock it up, and they're gonna promise me a return. They're gonna take it, and they're gonna put it somewhere where they're getting more of a return. They're gonna take it, and they're gonna put it somewhere where they're getting more of a return, and the Russian dolls continue, okay? That's what we actually did. We took our money, pulled it out of the bank, which is, again, yeah, it's not safe, but we gave it to somebody who gave it to somebody who gave it to somebody who gave it to somebody. And what did they actually do for the world? Nothing. They just created a million shitcoins along the way, right? That's a counterparty risk. That's called counterparty risk, or third-party risk. That's where you give your money to somebody, and you like, I hope you give it back to me. Right? I hope you don't go bankrupt. I hope you're not a scam. I hope you're not doing all this stuff. If they give it to somebody else, that's another counterpart. They give it to somebody else, that's like you're in this ever-expanding mess of counterparties. That's one level of risk. The other risk is there's no money there. There's no value there. There's nothing that they're doing that's actually valuable to people. Yes, some of them were lending to other protocols. Okay, there's value in lending. Somebody could borrow it and do something useful with it and give it back. But what they were doing was they were just taking it and they were putting it somewhere else, lending it to somebody else. Borrowing to lend isn't really a value generation mechanism. That's just being a middleman in the process, right? So in reality, there's very little, there's just very, very little value actually being added in the world, right? But the risk to you is like, yeah, when times are good, everything's good. But when times get bad, you have to go and ask that app for your money back. And that app has to ask the next place that they borrowed money or lent money to for their money back. So on and so on and so forth. And your money's not even there, you know? It's kind of like banks where our money's not in the bank. But this is like, I gave it to somebody who gave it to somebody who gave it to somebody. So we did that. We did that. And the people who were trying to be safe, they were like, oh, you know what I'm going to do? I'm not going to give it. I'm going to put it into Luna. I'm going to turn it into Luna. I'm going to turn it into UST, which is a stable coin. It's in the name, stable. It's a coin, it's stable, bro. I read the title, right? And then as long as I put it in this thing, I get 20% of my money. Where's it coming from? Who cares? 20% of my money. Why are you questioning things, right? What you actually did is you took money from the bank, you converted it, you got it into the crypto space, you put it into one ecosystem called Luna, which said, if we burn this Luna, we can turn it into this other, we can turn it into a stable coin called UST, Terra. And then if you take this stable coin and you stake it inside of Anchor Protocol, which is an app, then we'll give you the 20%. So now to get your money out, you got to go, okay, well, unstake it, which happens on the blockchain on a bunch of computers. That's what's happening on the blockchain. It means a bunch of computers have to do the work. Unstake it, it turns into UST. Then you have to go and sell it for Luna. Then you have to turn it back into some other valuable crypto. Then you have to convert it back into dollars, and then you have to put it into a bank account, and then you get to buy milk or houses or whatever you want, right? That's like 4 or 5 steps that you've locked yourself into. You literally walked yourself into a space where you don't understand how many layers are between you and your money. So then what happened? Wall Street saw that and went, oh, you do realize if we just pump a shit ton of money into this and pull it out, you guys are all going to be screwed. I'm not going to go too deep into the complexity of how that works, but it's a simple idea. Like, we'll just pump up Luna and we'll pump that money into UST, and then we'll just dump UST to a point where it starts printing so much Luna onto the markets that the Luna just falls off of a cliff and the value of Luna goes to zero. Okay, it's a classic Wall Street hack. George Soros did this with the British pound in the 80s, I think? 80s or 90s? 80s, I'm pretty sure. Somebody just did this with nickel. Nickel was a short, but like, short squeeze, sorry. But anyways, it's a classic Wall Street hack. You find a system where they didn't set it up right, and you can see that if I just pump in a bunch of money and then pull it out really quickly, the whole system collapses. And what happens is you get all the money from the system. So that's what they did. They came along. First of all, the Federal Reserve said, and the central bank said, we're not printing money anymore, we're pulling it out. Okay, so the market started to teeter, and kind of November to December, they started to kind of go sideways. From then until now, that money started to flow out of, the liquidity started to flow out of our little puddle. When that happened, Wall Street comes along and goes, great, we're done. We got to take our profits and leave. They came in, they pumped a bunch of money into Luna, pumped a bunch of money into UST, took it to $60 billion of value, and then just took $60 billion and left. $60,000 million. I mean, they didn't take $60 billion, they took about $30-ish billion, just below $30 billion. But they took $30,000 million. $30,000 million of our money. Like that. Okay? So this is the game that we're playing. But it gets even saucier. Okay? What happened was Celsius was one of these borrowing and lending platforms that was doing exactly this, taking our money, giving it to somebody else for a higher yield and keeping the spread. They had actually swapped a bunch of their coins with Luna because they were so sure that Luna is the future, right? So actually, let me back up a little bit. When this was as this was happening, the U.S. government was serving subpoenas to the guy who created Luna, called Do Kwon. They were like, "You're creating a stable coin backed by your whatever coin. That's illegal. We own the dollar game. Here's a lawsuit." And he just went, and he left the country, right? That middle finger was the most expensive middle finger ever put up in the crypto space, right? He was like, "Oh, fuck you. What are you gonna do, bro?" And they're like, "What are we gonna do? We're the U.S. government / Wall Street / we own the world. You're gonna pay." And go back and watch all my recordings. I was screaming. I was like, "Guys, they're gonna make him pay. They're gonna make him pay hard. Watch the results of this, right?" And that's what they did. They went, "Okay, you want to talk shit to us? You want to make our dollar? You want to control the game that we murder people over? We're going to destroy you." Celsius had swapped $200 million of Luna. And then when Luna went to zero, now Celsius is, was it Celsius or one of the other ones? It was $656 million that they put in. Today it's worth $650. It lost 1 million times its value. That in and of itself, as Luna was dumping, the Luna Foundation was dumping Bitcoin that they bought to try to cover their positions, which dumped the price of Bitcoin. So it becomes a cascade of collapses. Luna going down takes down Celsius. Celsius has a bunch of people's money. A bunch of us go, oh shit, market's dumping, get my money out. We go, where's my money? And they go, locked. We're going bankrupt, locked. We lost a bunch of money. Now, Celsius had given loans and actually borrowed from BlockFi and borrowed from Voyager, remember? Because they're just borrowing and lending the same money to everybody, right? So then BlockFi's like, oh shit, Nexo too. Nexo was smart. Nexo was like, oh, we'll buy you out, Celsius. And we're all like, Nexo must have a lot of money. No, they just have a really good marketing team that understood that this is how you keep things in place. But one domino falls, they owe money to the next one, so the next one goes broke, they're about to go bankrupt, then the next one, and the next one, and then they fall one by one. And we're still in the process of this happening. Because when you zoom out a bit more, Three Arrows Capital was an investment fund that was heavily invested in these things. Three Arrows Capital is also a fund that holds and manages the money of many of the projects that are in crypto. Right, so now Three Arrows Capital had lent out all this money to these projects. These projects are going bankrupt. People want their money out of Three Arrows Capital. Three Arrows Capital goes bankrupt. They have the money from a bunch of different projects in crypto. Guess what? Those projects just went bankrupt. So that's the process that's played out right up until now. Okay. What's happened in this process is we've seen changes that we have not seen ever in the history of crypto. Because now we're playing the Wall Street game. They can manipulate this market so far up and down, and they can destroy whole projects and whole entities and whole everything to a point where, like, we've never seen this kind of stuff before, right? So then, you know what Wall Street did? They're buying Three Arrows Capital, and they're buying BlockFi, and they're buying Celsius, and they're buying it all up. Right? When we say smart money is buying right now, we don't just mean smart money is going and buying Bitcoin. Like, any money can go buy Bitcoin. What they're doing is they destroy the whole sector, destroy whole institutions, and they come in and they buy the institutions. Right? That's the next level of this game. So they're buying up all these institutions because this thing we call DeFi was never meant to be decentralized. It was never meant to run. Do you think they're going to let us run the game that runs the entire world's finances? I mean, that's just ridiculous. And I've been saying this for a while. What also happened in this process is a lot of people effectively took their dollars and converted into a fake version of the dollar called Terra, or a fake version of the dollar called USDT, Tether, right? And converted it into this thing where they lost all their money. That's a great excuse for governments and institutions, not even institutions, governments to say, look, you guys don't know how to take care of yourself. You guys took dollars, real dollars, and turned them into a fake version of the dollar. Then you turned it into like dog-ear coins, or you turned them into a fake version of whatever. You put it into these financial places where you hurt yourself. Regardless, you lost hundreds of thousands of millions of dollars. Okay? Because you did that, we're going to come in and we're going to protect you. We're going to protect you by putting regulations around you, making it difficult for you to participate in this space. This is what we have, the regulations we have in the traditional financial space. So this is the narrative that's playing out in the background, right? And they're systematically taking control of this entire environment, which makes sense. That's how it's going to go down. If you think this is the mode to freedom, it's called blockchain. I'm literally going to get t-shirts made and be like, blockchain is going to give us freedom. No, it's called blockchain. It's here to block you and chain you into a new system that they're building. And yes, I know I'm supposed to be the guy who's telling you, like, crypto's great. Like, no, it's actually just a mode of control that's much more automated that we can benefit from, but don't get chained in it. While this is happening, we are all convinced the dollar's going to zero. We're all convinced the dollar's going to zero because they're printing it, right? And they're going to keep printing it. So you know the only thing that pumped since October? The dollar. The dollar. It destroyed the euro. Euro's almost at parity now. Japanese yen demolished. If you've been thinking of traveling in Japan, go now, because it is cheap. The yen fell off of a cliff. Euro fell off of a cliff. Turkish lira, done. Lebanon, done. Brazil, done. Argentina, done. Sri Lanka, done. Done. Countries are falling like dominoes. So this financial process plays out on the country scale, plays out on the national scale, plays out on the crypto scale. It's all the same game, right? What the dollar is actually doing is the dollar is destroying everything around it and sucking in that value. Because remember, if we know something, then it's wrong. So we know the dollar is going to zero. Guess what the dollar did? It didn't. It did the exact opposite. It actually, against real estate, against gold, against euros, name something and the dollar pumped against it. So the dollar crushed those things. That's why we've been sitting in the dollar for that whole period. Does that make sense? Like, am I just talking? Like, if people are like, I don't know what the fuck this guy's talking about. You know? Yeah, if you have any questions along the way, please just raise your hand and we'll. All right. So, we're in the midst of that process. There's still a lot more dominoes to fall. A lot of the smaller dominoes are still to fall. That's why Bitcoin's hanging around this 20K range, getting everybody comfy. Like, don't worry, we're not going to go below the previous all-time high. In all of history, that's never happened. It's probably going to go below, because that's what would scare the shit out of the most amount of people to sell. Because the game, the only game actually being played is in your head. It goes down to your heart too, because your head like fucks with your heart, but it's in your head. It's a psychological manipulation game to convince you of something, convince you I'm going left, and when you're fully convinced I'm going left, I'll go right. And then once you get convinced I'm going right, I'll go left, right? And that's the whole game. Convince you we're all going to 100K in December. All of YouTube, everybody was screaming we're going to 100K in December, right? We're all convinced we're going to 100K in December. We forgot, like in like January of 2021, we were convinced it's going to 400K. Right? Now what are you convinced of? We're all going to zero. Everybody's convinced we're going to zero. Because one did go to zero. Many did go to zero. And many will go to zero. 60-70% of the space will actually go to zero and never come back. But the real solid projects are not going to zero. We're just being convinced of the fact that they're going to zero, and then guess what they're going to do? And go the other way, okay? Even in this narrative, right? Like when I'm telling you this happened because they printed money and pumped it into the markets. Right now people are like, yeah, but Sim, they're not printing money anymore. Have you read the news for the last week? What they did is they broke the debt markets. When they pulled all this money out, they pulled so much money out of stocks. Effectively, they pulled back the money so much that the stocks dropping affected the debt markets, and the debt markets started to pump in an uncontrollable way. So then the European Central Bank came in and printed money. They're calling it a special tool, and they're effectively printing money and buying bonds off the markets. The Federal Reserve is using a special technique, they're calling, where they're pumping money into something called a reverse repo facility, which is the exact same thing as pumping money and putting it into the markets. Well, to us, they're not telling us, hey, we're printing $10 trillion and pumping it in, but they're doing it in ways which we don't understand. So actually, what in the background, what's happened is they've already started the spigot. They've opened the spigot already. And we're over here convinced, no, they're not going to send any money. This whole space is going to zero, okay? The biggest, it's not even a domino, it's a nuclear bomb that they've left in the middle of crypto, is Tether. Okay, what actually happened is a bunch of people had money in Terra, and Terra was pegged to $1. They dumped and pulled so much money out of Terra so quickly that the peg broke. It went from $1 to 99 cents to 95 and just went down to like basically worthless. But in the background, we were watching Tether. Because Tether has like, at the time I think it had like $80 billion or something in it. And Tether was depegged from $1 down to 95 cents. And they tested what it would take to actually break Tether. And we were all concerned with Luna, but the smart money started moving out of Tether into USDC. Because Tether is also another very, very fake version of the dollar that's not real, right? That's not actually backed. When they collapse Tether, it's over. When they collapse Tether, we're gonna have the most biblical collapse we've ever had. And the most biblical collapse that we've ever had ever since the 1930s Great Depression crash is gonna play out within the next 3 years. It's probably gonna play out by 2023. Timelines are lining up by like sometime at the beginning of 2023-ish, but it's about to play out. In crypto, it's going to play out from Tether being depegged. Because what people have done, a lot of people have done, is they've taken money, they've converted it into Tether, and they've used Tether to go into these different protocols and places which accept Tether, and they've invested their money into a protocol who gave it to somebody, who gave it to somebody, who gave it to somebody. Even if you get to the point of getting your money back out again, it's going to be convertible into Tether, which is going to be worthless. So that entire ecosystem, it's a California hotel. The other game that's being played is to convince you to walk into a California hotel where there's no exit, right? So Tether is going to be the nuclear bomb that blows up this entire space. So as I'm saying this, you're probably thinking like, Sim, that's a lot of problems. Can you like just define like everything? Is everything going to zero? Is everything going to blow up completely? Let me tell you my experience, right? In 2013, this market pumped from like single digit dollars to like $200. And it crashed like 80% in a day. It was only Bitcoin at that point, right? And we're like, that's insane, this thing's done. This thing's done, it crashed 80%, it's not coming back. And so the people who were actually holding it, they're like, whatever, man, this thing's like $20. Like it was at $200, now it's at $20. It's done, the game's done, just take it, whatever. I got it at $1, take it at 20, the game's done. The people who bought it at 20 rode it up to 1,200 6 months later. From 20 to 1,200. The way that was being done was, it was being done through, it was actually mainly just being done through Mt. Gox, an exchange, right? And then Mt. Gox went bankrupt and had a hack and all this stuff. And the whole market fell off of a cliff, and we were all convinced they were all going to zero. Because at that point, we're like, hey, we don't even know what this coin thing is. There's no way to let the new form of money exist. It's going to zero. It didn't. It went down. It went from $1,200 down to like $200, but it didn't go to zero. And then the people who got it at $200 rode it up to $20,000 in 2017. There was a lot of pain. Like they had to hold it and just grind and grind and grind, and for years, like their family was like, "You're an idiot. You're 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 an idiot. Can I have some money? You're a genius. We love you." All your family members show up out of the woodwork, calling you just the best person on earth, right? But on the other, and then they launched a financial product at the top of that, an ETF at the top of that, and the market fell off of a cliff. And we're like, everything's going to zero. At that point, we had a ton of altcoins. We had a lot of these supposed ideas were supposed to come to fruition. And most of them went to zero. But Bitcoin, Ethereum, Ripple, the valuable ones did not go to zero. They went down a lot. It went down to $3,500 in COVID. From COVID, we rode it back up to $65,000 or $70,000, depending on where you calculate from. Now we're going to zero again, apparently. We're not. What you're actually buying, so how do you mitigate against what we just discussed? Understand what you're buying. If you cannot answer in one sentence what the thing does and why it's even valuable and worth buying, don't buy it. Until you can answer that question, and then followed by the question of where's the money coming from, and it's a very real thing that you're like, okay, that makes sense. Let's do an example, right? Bitcoin. First of all, what's a Bitcoin? Can anybody answer that question? What's a Bitcoin? Yeah, what's a Bitcoin? What does it, like what is it? What does it do, and where's the money coming?
Can you use the microphone?
Yeah, can you use the mic? Where's the mic? Rock that mic. Rock the mic right.
Test. Bitcoin is used as a store of value, and we are using Bitcoin. The function of Bitcoin is to pay for Bitcoin transactions.
Lovely. I love that one of our team members knows the answers. Yes. Okay. So what's a Bitcoin? A Bitcoin is a method of storing value that can't be corrupted the way that gold can be corrupted. Not gold, dollars can be corrupted. It's also a place to store value where when the demand goes up, supply doesn't go up. Supply keeps going down. As the gold demand goes up, supply for gold goes up because miners mine more gold, right? But what's an actual Bitcoin, and what does it actually do? It simply just pays for a transaction fee. So can you pass over the mic? Oh, nice, we got another mic. Oh, we can have like a karaoke.
I think Bitcoin is just a transaction output
Great,
of some decentralized computers.
great. It's just an entry in a book It's just an entry in a book run on a bunch of computers that says how many Bitcoin you have, and it is just an entry. It is just a data output, let's say. The only actual function of a Bitcoin, the actual real function of a Bitcoin, is to pay for the transaction fees of the transfer of a Bitcoin. That's the only technical function of a Bitcoin. So what does it do? It allows me to put my money somewhere where the government can't steal it, and it's something rare. Okay, well that's valuable. That's super, super, super valuable. That's like gold. Okay, where's the money coming from? It's coming from people who believe in that narrative, who are willing to come and stay there for a long period of time. That's like a weird value generation mechanism, but it's a value generation mechanism. You're taking the risk early. Somebody's taking the risk early of entering a space and developing a new system that allows you to store value. That is valuable to people. Protecting your money from the governments and from being Russian is a valuable thing. And the money is coming from people who believe in that system, and you can enter and take the risk early, and you can take some of the money out because you supported it for some period of time, right? Now please do that for the rest of your portfolio. What does Ethereum do? Ethereum is a bunch of computers with an accounting book running on it, but it allows you to program apps on top. Well, that's valuable. We know what happened last time they invented. Apple set up a bunch of computers that you can run apps on top of, and look at what happened to Apple, right? So that's real value. Where's the money coming from? From people who believe in that model and are willing to invest in it and actually add value. And where's the real value coming from? It's coming from the people who use the apps. It's coming from the people who use the apps to improve their own lives, therefore adding value to the system. Okay. Time Wonderland. Where does the value come from? It comes from the person who's coming behind you. What does it do? Nothing. It's a value transfer mechanism where it transfers wealth from the hands of the people coming in at last to the hands of the people who come in first, right? The way we truly mitigate what just happened or being caught up in what just happened is understand that this is the next stage of the internet. We're building the next stage of the internet. And the next stage of the internet will not be connected up in giant computers owned by one company, not the Googles and the Facebooks. That's the old internet. Next stage of the internet is going to be us hooking up computers within ourselves, sharing the wealth within ourselves, and building apps and usage mechanisms on top of that. Okay, that's what's actually going on. So if you just learn to pick certain parts of that new internet and hold them, and you can verifiably say they're valuable and answer these two questions, you're going to crush it. But if you don't, which 95% of the space people enter, they don't even understand that part, you're going to lose your money. And the 5% who understand, take all the money. So wait, Bitcoin is like gold, but it's digital. Okay, that's cool. Ethereum is like servers, yeah, it's like Amazon Web Services. But everybody's running the servers. Great, that's like computers. So gold is being revolutionized, computers are being revolutionized. Ripple is how to move money between banks. Great, so banks are being revolutionized. USDC is a stable coin, so the dollar is being revolutionized. Every single thing around you is being revolutionized. Literally what you see, what you smell, what you hear, what you experience, what you feel, who you are. We're revolutionizing those. They're called metaverse or gaming or whatever. Every single thing in the world is being revolutionized. Revolutionized, not just replicated. We're revolutionizing it by completely changing it 100%. So you don't even get it. You will not get it. You can't understand why this digital piece of land sold for more than 40 houses. 40 houses that could house 40 families are not worth this empty piece of digital land that nothing's on. That's a revolution. Those people it's going to take them 10 years to understand why that digital piece of land is even valuable. We barely understand it. But it's a revolution, right? What it is actually doing is revolutionizing society, right? Because in the bank, I have my money in the bank. Where's the bank? In a country, okay, in a jurisdiction. And if somebody says you're Russian, the money disappears. Well, we're revolutionizing it. Where's the money in Bitcoin? Which country? Who's going to take it? Oh, Indonesia says, we don't like we just go, what? What'd you say? It's not in Indonesia anymore. It wasn't even in Indonesia in the first place. We brought it into your regulatory structure to whatever. But if you mess with us, we will move all of the wealth out of the country in literally the snap of a finger, right? That's a revolution. Governments have lost power. Individuals have gained the power. We can run the servers. We can own the servers. So when you're owning these coins, you're owning the ability to use these servers to do something, right? If you own a coin of an app, you own the ability to use that app. If you own the coin to Ethereum, then you own the ability to use Ethereum. So we own it. We build it. We own it. We can invest in it without brokers, without governments, without banks, without anybody, without people. That's a complete revolution. Then we're going to slap something on your face, and we're going to make sure you see what we want you to see. And then we're going to somehow figure out a way to take over your ears and your smell and your senses of touch and just give you a hallucinatory experience and completely suck you out of this reality and put you into the matrix, and you'll own nothing and you'll be happy. That's a revolution. That is not a replication of what's happening in the world, right? But that's what's actually going on. And you're over here like, let's buy these coins. They're coins, right? The cryptocurrencies. Everybody's calling them currencies, so let's buy them like they're coins. They're not coins. They're tech stocks. They're the next stage of the internet. They're tech stocks. You're buying tech stocks. And when you buy a tech stock, if you don't understand what that tech does, almost certainly the tech is built to steal all of your money. And 60% of this space is custom built to steal all of your money. It's like custom built. 30% of this space is not obviously trying to steal all of your money, but they're probably going to lose all of your money, simply because 90% of startups always fail, statistically speaking. Out of the 10% that survive, that actually make it, 90% are made by people who've made successful startups before. So that's another thing you can check, like, has this person made a successful startup before? Did Do Kwon make a successful startup before? No, he crashed a stablecoin before. Okay, so it's the guy who's making a stablecoin already lost $50 million in an existing stablecoin and has not made a successful tech startup before, and we're going to give him a $60 billion company, a $60,000 million company? Do you think your money is going to disappear, right? So when you're doing analysis about investing in projects, look at who's running the project. Look at who's running the project. Have they had success running previous projects? Are they similar to this project? That would be even better. Or are they the elites? That's my check mark. I call it elite approved. And if you're not a conspiracy theorist, you don't have to be. The people with money run the entire world. Okay? And when they build something for them, by them, it's the most high likelihood of success because they own the world. They run the world. So if you could just understand, like, I don't know why I'm like over here. Like, if you could just understand that, this is the next stage of the internet, these are tech stocks that you're buying, and what that tech does, that would be super, super, super valuable, right? And if you did that analysis before all of this happened, you would realize, hey, I'm holding a bunch of stuff that doesn't really do anything. And it's only valuable because everybody's hyping it up, but actually the money is not coming from a legitimate source, and it's not actually valuable, and it's actually not going to be one of the pieces that builds the future of the internet, right? What's coming up in front of us is there's going to be regulations across the world. They announced them 2 years ago. They're kind of going live now. There's going to be crypto regulations across the world, which are going to make it much more difficult for us to participate with crypto. There's a completely new banking system coming online called the ISO 20022 banking system, and it's going live from November of 2022, and it's going to complete implementation by November of 2025, and by 2024-ish, latest, they're going to flip a switch on the entire banking system. Overnight, they're going to switch it over to this new system. And this new system has zero financial sovereignty. Zero. You do not own the bank account. They own the bank account. It's automated, so it auto-tracks, auto-certifies if your social credit is good enough for them to let you get milk. It auto-taxes. And if you're Russian, it auto-Russians you. Okay? And between now and then, we're all going to get Russianed. We're all going to get Russianed. We're going to lose all the money in the banks. Because remember, the banks made us sign a piece of paper saying, like, when things go belly up, we can take all of your money. There's also going to be stablecoin regulations saying that you can't create stablecoins that are not backed by real stuff. Okay? What that's actually going to do is it's going to take away this ability for us to participate in this space like we have. Say goodbye to the wild, wild west of crypto, and by 2024, this whole landscape's going to change. It's going to be institutionalized, and Wall Street's going to enter. They're entering as we speak. Bless you, bless you. The fact that they're coming, the fact that Wall Street's coming, means You think thousands of millions of dollars sounds like a lot? They have thousands of trillions of dollars. They have thousands of thousands of thousands of millions of dollars. They have they have millions of dollars that are burning a hole in their floor because the dollar is, over the long term, the dollar is dying, and they got to put it somewhere. And there's only one place, there's two places technically where you could put it. You could put it into this new stage of the internet, which is at the beginning of its growth period, or you can put it into commodities, which is real world stuff, right? They're coming with that money. And they're not going to enter in a space where all of us are sitting there with our bags like, yeah, no problem. You're going to send trillions? I'm going to take some like couple million, and I'm going to get out of here, right? What they're doing is right now shaking us out. First of all, they convinced us, don't buy Bitcoin, don't buy Ethereum. Ripple sucks. Ripple's a stable coin, shit coin, poop coin, going to zero. Lawsuit, ignore it. Buy this. Look, we put a dog on a coin. Buy the dog coin. Right? They convinced us to buy dog coins. They convinced us like, no, decentralization is the everything. Look at how well Luna is doing. Buy Luna. You look at UST, buy that. Right? So they convinced us towards this narrative of like, and walked us into spaces where we would destroy ourselves so that we don't have the money to actually sit there and take the money that they're bringing into the space. So the good side of this is if you just make it through this and you don't lose all of the money that you have, there is such a flood of liquidity coming, the numbers won't even make sense. It'll be like we're talking about rupiah, okay? And what's gonna happen is now that they're doing this, they've kind of tanked the markets, they're coming in, now they're printing money to pump the markets up again. They're gonna pump them up in a sharp way, which I guarantee you this, I'll see you in 8 months and watch how this narrative completely shifts and money returns and exuberance returns. When that pump happens, they're going to dump the entire market across the world. And when they do that, then the Federal Reserve and the central banks are going to have an excuse to print insane amounts of money and pump it into the markets. So now they have a bunch of money, Wall Street and the bankers, and they have an insane amount of money. Plus they're printing an insane amount of money and giving it to their friends, and they're going to pump it into this market. But what they want is they want you to lose all of your money before they get there, because they don't want you to take their pennies. How much we take is a rounding error as far as they're concerned, but they don't even want that. Because they know you don't understand what you hold. You don't know what you're holding. You think these are just currencies, just coins. What you don't understand is you are holding the usage power of the future of the internet. You are holding a quantified version of the processing capacity of the future of the internet. And they know that, we don't. So, right now, smart money is buying hand over fist. They're buying whole institutions, they're buying cryptos, they're buying everything that's solid. We'll show you some data pretty soon, but like, they're buying everything hand over fist because we're at a place where we've never been in history as far as the opportunity to enter this space, okay? But guess what happened, right? Like, first of all, how are you feeling in December? Didn't you want to like sell the house and put it into crypto in December? It's been like 40 seconds. How come now all of a sudden we're like, no, fuck this space. I'll never put money into it. Look at how many people lost money, right? We are constantly being manipulated into doing the opposite of what's good. So right now, if there's terror inside of you that's turning your stomach upside down from watching your portfolio go up and down, and you're hearing the stories of everybody losing all their money, you know what you should do? Buy it. You should go in and buy it from those people. Because if they're losing money, that means they're giving money to somebody. That means that's the opportunity to enter, okay? But you enter 60% of the space, your money is going to zero. You enter 30% of the space, you better enter and exit because your money is going to zero within the next 4 years. You enter 10% of the space and you're buying oil, gold, banking, money, dollars, computers, apps, tech stocks, everything. Everything has been reinvented. Like if I told you, hey, oil is being reinvented, just buy some oil. What happened to the people who bought oil when oil was invented? Insane. Buy some internet. They became insanely wealthy. Each one of these things is a wealth generation mechanism that made generational wealth. All of them are being reinvented. And that's part of that 10% that we're talking about, right? And if you're here and you're waiting for me to tell you these coins, I never do that. So just please know that like my point isn't to tell you which coin is the greatest coin ever, because you could easily go and lose all of your money on all of these coins if you do this wrong, right? Okay, wait, okay. I accept that. This is the next stage of the internet. these are tech stocks. When I hold a coin, I hold a piece of the processing capacity of that company. I get that. That makes sense. What could I have done to avoid what just happened? What could I have done? What you could have done is what we just talked about. Look into who created the project. What does it do? Where's the money coming from? Do you understand it? Like, does it make sense in your worldview of things? Because when I'm telling you, there's this digital piece of land that sold for, $40 million, I don't even get it. I'm like, that doesn't make any sense. So I'm not going to buy it, Who said they bought NFTs? NFTs, there you go. So you guys got NFTs. I like NFTs, but I'm not an expert in them. So I'm like, I'm not going to buy NFTs. I'm going to buy the things that I fully understand, that I fully am able to comprehend, and stand behind that, right? Secondly, you buy things with the thesis that, first of all, this money's gone. The way I put money into crypto is I go, and it's gone. Right when it happens, I say this money's gone. Psychologically, emotionally, it's gone. And if I'm like, there's no way this much money can be gone, then I don't put the money in. I'm not saying put in only what you're willing to lose. This is different. Put in what you're okay feeling like it's lost. That's one, there's a small, minute difference there. But secondly, I put it in with the thesis of, I can't touch this money for 4 years. I cannot touch this money for 4 years. What that allows me to do is it allows me to completely disconnect from the expectation of a return from that money. Because if the game that's being played is a psychological game, and they're manipulating my heart and they're manipulating my head, and the way they're manipulating is literally just one number on a screen going up and down. That's how they're doing it. The dollar-denominated value of my portfolio going up and down, that's how they're doing it. Then what I do is I go, first of all, this money's gone. It doesn't change who I am at all. I made the money. I can make it back tomorrow if I wanted to, and I'm gonna. Secondly, I can't even touch it for 4 years. Mentally, energetically, I'm just going to accept that I can't touch it for 4 years. Then, I put it in, and I don't look at the number. I don't look at the number until the number's at a place where I want to look at it, right? So let's say, I enter. I'm like, you know what? 50K Bitcoin seems cheap. I enter at 50K, it goes down to 20K. You know what I do? I set a price alert at 50K, and then I forget about it, and I go live my life. Because if I've picked the right tech from the beginning, it doesn't matter if it goes up or down. At some point, it's going to be way higher than where we are today. And my thesis is I can't touch it for 4 years anyway. So somewhere in the next 4 years, this thing is going to make a ton of money. And then you know what I do? I go to the beach. I get a coconut. And I sit. I just get a coconut. Right? Because isn't the whole point to be on a beach sipping coconuts? Why the fuck are we in Bali in the first place? Is it to make numbers on a screen go up and have my asset portfolio? No, bro. It's to hang out with people you love, doing shit you love, in places that you love. Yeah, the market's down. I don't care. The coconuts are there and the beach is there. My friends are there, and I kept enough money on the side and I have cash flow coming in. Couldn't care less. I bought good shit. Ignore it. Forget about it. Detach your emotions from it. Because the moment you do that, then they're then what control do they have on you? Because if their goal is, Wall Street's goal is, and money's goal is, to convince you to let go of what you don't understand the value of at a lower price than where you bought it, if that is the only goal they're playing and the only control mechanism they have on you is a number on a screen, then I set a price alert so that it lets me know when we're back and I should pay attention. And I go live my life, and I build cash flow, and I build love, and I build joy and improve my life and the people around me. Does that make sense? Right? Did anybody do that? Great. Amazing. Amazing. And these are happy people. That's the point. These are happy people. You buy good shit. If it goes down, don't worry about it. 100% of anybody who's ever bought the solid projects would not have lost money. And this is a fact. 100% of anybody who's ever bought the solid projects, that's the caveat, solid projects, would have not lost a single penny if they just didn't sell it lower than where they bought it. I know a friend, he put $130,000 into the market, in Bitcoin in 2017 at like 19,000 Bitcoin, wrote it down to like 30,000, less than 30,000. Family's like, you're an idiot, complete moron. Felt like a moron for 3 years, 4 years, put it into Luna, turned it into $1.2 million, did not take it, and went to zero. Solid project, execute a strategy right, had the profits, but apparently we're going to the moon, right? So if you're buying these solid projects and you're doing these shifts and stuff, make sure you're careful about it. But okay. It's the internet, bunch of computers. I buy processing capacity for these computers, and I know they're solid computers. When I buy it, I hope it goes up. I hope when I buy it goes up. But almost certainly when you buy it, it's going to go lower. I set a price alert, I forget about it, and I go live my life. Then when it comes back, when the prices come back, maybe 3 months, 6 months, maybe a year, because remember I said 4 years. I'm okay if it doesn't come back for 4 years. When it comes back above that level, that point you need to have a strategy in place. You literally need to have a document written out with exactly what you're going to do when that happens. And these sessions are going to be that. We're going to take you through the strategic planning sessions and help you build your own strategies and all that kind of stuff. But you literally have a plan. When my money, my X amount of money goes to X amount, I'm taking out X, right? Because the whole game is take a risk with your own money, with your own hard-earned time, effort, and energy that you converted into money. Make it grow, and then reduce your risk. You know, put in 100 grand, it goes to 150, take out 25. Now I only have 75 grand of risk. Repeat, another 25 out. Repeat, another 25 out. Eventually I'll have 100,000 out, and I'll have money in the game. Now I can't lose any money, because you've won the game. Stop playing the game of trying to get rich quickly. Start playing the game of not getting poor slowly. I'll repeat that. Stop trying to play the game of trying to get rich quickly, which is almost certainly going to lead to you getting poor quickly. Start playing the game of not getting poor slowly. That's the game we're playing. In the bank, I'll get poor slowly. Stocks, well, inflation's so high and the fact that they're printing money, I'll get poor slowly. Real estate, if I bought commercial real estate in New York, I'm getting poor slowly. I actually got poor pretty quickly because they snapped their fingers. Thanks for coming, guys. Appreciate it. The game of not getting poor slowly is played by taking your money out at like the first instant that it feels comfortable. Okay, and again, we're going to go through all this stuff. So I'm just explaining this. So now, bought good shit, understood what I'm buying, put money in that I'm okay, it wouldn't change me if I lost it, put it in with a thesis of 4 years, put a price alert, go live my life and build cash flow and all this kind of stuff. The second thing that's a lot of things, but the second conceptualization you should have in mind is, where is the world? Is the world in a state of panic and fear? Buy that puppy. Buy it. Buy it. Is the world in a state of exuberance and everybody's rich around you? Looks like they're getting rich around you? Get out. That's a pretty simple signal. Is grandma coming and telling you like, honey, I heard about this Bitcoin. I think we should buy some Bitcoin. Like, be like, one sec, grandma. Sell, turn it into dollars and be like, gams, don't get in. This is done, right? Is everybody convinced we're going to zero and everything's fucked? Great time to buy it. Now, but the thing is, like, especially if you're new, if you haven't been through these cycles like this, you're used to the stocks space where like 5-10% drops is like insane. 20% drop is like, that's a massive correction. We're going into a bear market. 30% is like, that's a massive bear market. Whereas in crypto, 30% is what we call a Tuesday. It's like it just fell off 30%, okay. Because when it goes 30, 40, 50 down, 60 down, 70 down, 80 down, 90 down, 95 down, 10,000 out. Right? $20,000 Bitcoin, $1,200 Bitcoin, $200, $20,000, $3,500, $70,000, whatever, $12,000 now, $150,000. That's how this game is played. And it's makes you want to throw up. It literally, like, actually, I know people who actually literally physically get upset stomach and have diarrhea when the market dumps. Right? Because it does make you want to throw up. To watch that kind of volatility, Because we're used to that number on the screen in the bank, right? We're used to being like this much money in the bank. That's how much money you actually have. When that number goes down, you actually have less purchasing power. Whereas in this space, that's not what's actually going on. You're buying tech stocks, you're buying these solid things. So in the middle of all of this stuff happening now, if you haven't lost all your money yet, congratulations. Congratulations. Because the place where you get proof of the fact that you picked the right shit are these times, right? And the proof that you picked the wrong shit is also these times, right? So if you haven't lost all your money yet, good, congratulations. Hopefully you can use this price alert strategy to ignore it and go live your actual life and go add value to actual people's lives while this game gets played on in the background. Between now and sometime in 2023, what we're seeing is a giant wave of liquidity, money, coming from the financial ocean called the debt markets. Right? That's what I just described. The European Central Bank and Federal Reserve, there's a giant tsunami of money that's coming from there. Plus, there's a bunch of money that's been put onto the sidelines in this process, and that's just waiting to be deployed into the markets. Plus, the Federal Reserve has $2.8 trillion in the reverse repo facility. Plus, the US dollar has sucked in all of this liquidity out of the space, which is now going to flood back into the space. So there is going to be a shocking event, a completely history-defining event where we're going to pump. We're actually going to pump. Now that we're all convinced that we're not going to pump. During that process, de-risk yourself. During that process, get your money out. Because during that process, if you just get the money that you put in out again, and you turn it into stable coins, don't put it in the bank, turn it into stable coins, maybe put it with you, maybe put it with the custodians. On the other side, it's going to go, bah, and we're going to see a crash like we have never seen in the history until 1929. Last time that happened was 1929. In crypto history, it's never happened. Bitcoin's going to go down to levels which will break all ideology around what Bitcoin's supposed to do, right? The right way for it to move. So if you just get your money out, the amount that you put in, and that crash happens and everything's at a 95 to 99% discount, the person with cash is king in that environment, right? So just do that. Have a plan. Have a written out plan of exactly what you're going to do when the price alert gets triggered and how you're going to get your money out. And yes, we will do individualized sessions on each one of these pieces. Now, another way you can see all of this, you pull up a glass note. So you can see these things. You can literally chart them and actually make decisions from the charts. And this is what we do. Yeah, it's $10,000 to buy access to this thing, but you can actually judge it from there. Where are we at? Ah. No, this is not it. Dashboards. And then market tops and bottoms. Great. Smoke break. Uh-oh. Why is it? There's a, no, there's an electrical, no, but there's electricity coming out of your laptop. Because you're bare feet. That's why you shock yourself on the laptop, because you're bare feet. Yeah, I know. Bali electricity, right? The great thing about this space is we have data, right? Stocks, what data do you have? Some analyst somewhere tells you something, and you make a decision from it, or Bloomberg tells you something. In all the other spaces where you invest, who gives you the data? It's just people kind of manipulating the data according to what's beneficial for them and giving it to you. We have actual data from the blockchain. Need the password? It's not typing. Oh, okay. We have actual data. And this data will tell you how people are feeling, how people are moving, where's the money going, All that. And this data actually is the opposite of what you're being told in the world, right? This data allowed us to see, okay, the market is done for May. I told people May is the top. Even though we went to 69K in what was it, October or December, November, May was the top from this data, okay? Wall Street can manipulate prices to look however which way they want because they own so much money. But the data doesn't lie. If you can tune into that once every few years, once every like 2 years usually, but at least once every 4 years, there's these opportunities that come which are like clearly marked out in the data as being these fantastic opportunities to enter or exit, okay? Dashboard, market tops and bottoms. That's okay. So make decisions because you have some stats, some knowledge, some understanding. First of all, remember, we come in with the understanding of like, why am I buying this? Because this is the next stage of the internet. What am I buying? I'm buying computers and apps. What do they do? I gotta ask and research what they do to be able to know what they do. Then, should I buy it now? Should I sell it now? I mean, you should already have a strategy that sells it along the way, but you know, can I get some verification of where we are in this space and how can I do that? Once it loads up. Okay, so this is a set of indicators that have never failed to tell us when it's a great buying opportunity and almost never failed in telling us when it's a great selling opportunity. So, can you please open this in a new tab? Like function and then hit it. So this is something called Bitcoin reserve risk. This is a metric that's a representation of the confidence that's in Bitcoin charted against the price of Bitcoin. So what this tells you is when this metric is high, it's telling you the prices are high but the confidence is low. And when it's low, it means the prices are low but the confidence is high. That's what you want, right? You want low prices and people to be confident in the system for it to actually be more valuable later on. High confidence, low prices. Low confidence, high prices. And the cycles play out in these ranges. Okay? Never in history has it ever been that the confidence in Bitcoin was high and the price was low, and that it did not blow people's mind afterwards. Back here, Bitcoin was like, can you move this please? Or do the thing? Can we close this? I don't even need it. Yeah. All right, we'll get that closed one day. Down here, the Bitcoin was, almost.
Come on.
Just like move it up here if you can. There we go. Thank you, sir. Blessings. So down there, Bitcoin was 30 cents. It was 30 cents. Back here. Down here, oh no, sorry, no, wait, I'm doing that wrong. So right here, no, it's okay. Bitcoin was $2. First time I did it, it was $2. The next time I did it was $500. The next time I did it, it was $3,500. The next time I did it, it was $3,500. Now I was doing it again, and it's $15,000. So exactly. So thank you for speaking out, because most people are probably like, yeah, I don't know what you're talking about. This line is the indicator that defines how much confidence there is within Bitcoin compared to how high the prices are. This black line is the price of Bitcoin, right? Let me actually. This black line is the price of Bitcoin. This is the indicator. This red zone and the green zone is where this indicator oscillates between. oscillates between. When we're down in these ranges, it's a really good sign. It's a buy signal, basically. It's telling you that the confidence is super high, but the price is super low, right? Great. So if you would have bought it here, you would have bought it at 3,500, you could have sold it on the way up. $2, $30, whatever, right? Great. So that's one indicator telling us that there's a reason to actually participate in this space. Can we go back to the other page, please? The glass node? Yeah. I'm not going to go through all of them. This is one that charts out how old the Bitcoin is that moves. Again, green zone, buy zone, black line, sell zone. It's a little hard to see, but this black line right here, sell zone. Same thing, it's broken through that level. It's telling you, hey, this is first of all unnatural price action. This is not how this market is supposed to move, which makes sense. Wall Street is doing this. But that's a buy signal like we've never had before. The last time when Bitcoin was at $2, even then it wasn't as good of a buy signal. Okay? Great. Can we please scroll down? This, MVRVZ score. Yeah, can you open that one? Can you also open this one? And let's go down, please. Keep going, keep going, keep going. These. So all three of these. This one, and that one. And let's go down. Okay, let's just open percentage of entities. And I have a pointer and I'm still pointing with my finger. Old school. Let's keep going down. Go down further. I think this is it. Okay, so now let's open the next one. Yeah, next one. Let's reserve risk. This is yeah, next one. You probably don't even know that this is over here, do you? Right? We're all over here making decisions like, I'm about to put my life savings into a place where I'm about to get rich. And then there's hedge funds looking at this going, do you realize you're getting in here? Do you realize you're getting in here? Right? So this is called MVRVZ score. This is a representation of the realized value of Bitcoin charted against the market value. It's a little complicated in the way that's calculated, but simple terms, buy, green, buy, red, definitely get out. But along the way, definitely don't wait for the red, because there's a lot of us looking at this now. Oh my God, what a buy zone. What a buy signal, what a buy opportunity. Okay, that's two of them telling us that that's the case. Let's go to the third one. Can you actually click on all of them one by one so they preload? We got to get you a new laptop, dude. Let's go back to this one. All right, so next week when this loads up, we'll go through that. So the thing is, there's so much data, real, verifiable data, that's screaming that this is an opportunity that has not been here since at least 2 years, but as far back as 10 years. And this whole space has only been here for 10 years. This is how we make decisions. This is how we make decisions, right? When this data said the top was in May, the top is in May. Okay, until the data shows something different, I don't care what you're telling me. People are like, we're going to 100K. I was like, we're not. They're like, all of YouTube's going to 100K. I was like, we're fucking not. They're like, you should be on YouTube. I was like, that's why I'm not on YouTube. Now we're on YouTube. But like, you know, like people forced us to go onto YouTube. But that's the thing. When the entire world's telling you we're going one way, and this is telling me we're going another way, this is objective. That's subjective. Do not listen to 20-year-old toddlers on YouTube and make life decisions from it. Don't even listen to a 33-year-old, not a toddler, but just, you know, waking up from toddlerness and make all of your decisions. Take what I have, which I've learned from 50, 60, 70, 80-year-olds who've been in the market space, and run with it and listen to those 80-year-olds. We'll get you in touch with them. What's the question?
Well, I think you should listen to the toddler on YouTube and do exactly the opposite.
That's a good point.
If you go on YouTube today and you just type Bitcoin, everything you're going to see is crazy faces
Yeah,
of
it's like
people going back, oh my God, we are going down to
Yeah.
zero. You're going to see all the shitty emoticon you can imagine.
Yes.
If you did that back in October, everybody was going to the moon and Lambo and all that. So when all those toddlers says we're going to the moon, you go out. When
Yep.
they say we're going down to zero. But
Great.
YouTube is a very good indicator.
Yeah, YouTube is a great indicator. Grandma's a great indicator. This room is the best indicator. Okay, when this room is empty, buy the shit out of crypto. Watch what happens when crypto's up. This room fills out. We run out of seats. People are standing at the door. You know, and that's when you sell it. I literally use this room as an indicator, right? So this is a representation of who are the people holding crypto. These darker ones are the newest people. That's your 24 hours. 1 day to 1 week is right here. 1 week to 1 month is right here. You get the idea. Okay? The more the newest people are holding crypto, the more you should let it go. And the less the newest people are holding crypto, the more you should buy it. That's a simple well, I mean, that's the factual representation of it. Guess where we are? This spike was the top. You see? That spike was the top. This was not the top. This data is even telling you that that wasn't the top. But guess where we are now? Down at ranges where we have not been for a very long period of time. Since back here in COVID, since back here, all that. So okay, now let's go to this one. This one is like my favorite. This is like I wake up, I don't watch Netflix, I watch this, right? This is a representation. It's called net unrealized profit and loss. If there's one indicator we're paying 10 grand to get access to, it's these ones, okay? This is a representation of the net unrealized profit and loss in the markets, okay? This is a representation of the emotions people are feeling. So actually, while we're doing this, can you open up a new tab? Please type in Wall Street cheat sheet. So we got some new people. So Wall Street has a plan. Remember I said write down a strategy and write down a plan?
I will open it while you are open.
Oh, nice, thank you. Remember we said have a plan? You know what Wall Street's plan is? Take all your money. The plan's name is take all of your money. And the strategy of that plan is this document that we're pulling up. It's called the Wall Street cheat sheet. It's taught to complete novices to help them understand how we can be manipulated into giving up our money. Okay? That sheet, once it comes up, is a representation of the emotional roller coaster that you are put onto to get you to give up your money. Okay? We'll go through it properly one at a time. But these are the emotions that you go through. Can you please hit I accept here? Thank you. These are the emotions that you go through. Capitulation, which is like complete panic, fear, and terror, and selling at a loss. That's what capitulation means. Just dumping it at a loss. After capitulation, on the upside, you have hope, then you get optimistic, then you believe, then you get euphoric. The euphoria makes you blind. Once you're blind, you get greedy, so you don't sell it. Your greed blinds you so that you're in denial when the market's dumping in January. You're in anxiety when the market keeps dumping in March. You're in fear once the market keeps dumping in May. And then you go into complete capitulative fear once the market comes back and it's like 20K, 10K, right? So can you please go to the sheet? This is it. If there's one game you need to understand, it's this. That's it. This is the only game actually being played. Convince you not to buy it down here, because look, you know, who shorted the market? Why did the government allow this to happen? Why did the government allow UST to happen? And why didn't we have regulations around Terra? That's exactly the vibe we're in right now, right? My retirement money is lost. I am an idiot. We're all fucked. Welcome to today. That's when you should buy it. That's when you should buy it. Because what's going to happen is you're not going to buy it. You're not going to buy it because it's scary, right? Because so many people lost money. Then it's going to go up and you're still not going to believe it. You're going to be like, this is sucker's rally. No, it's fresh in my memory. A few months back, everybody lost all their money. This is cyclical and it repeats. Comes back here, pumps. You're still in a state of disbelief, so you still don't believe that the rally is real. Then when it pumps hard, and it gets to a point where it's way higher than it was back here, this happened when we went to 20K in 2020. When we went to 20K, which was the previous peak, everybody's like, oh my God, I think this is moving, I'm gonna get hopeful, right? Remember, we had capitulation and fear and depression and stuff, then we have hope, then the market pumps, of course you don't sell it, you become optimistic because you're like, look at how rich I'm getting. You hold it tighter. Then you start to believe in it. As the prices go up, you start to really believe in it. This is where my friend was in Luna when he met me. He was like, I love Luna. I was like, what are you gonna do with Luna? He's like, I'm gonna give it to my kids. And I was like, what are your kids gonna do with it? Eat it? And he's like, no, they're gonna hold it. I was like, okay, great. I guess that's the point. Just hold something and die and give it to your kids and then they hold it and then they die? Like, did they have coconuts on a beach or something? Anyways, he was a believer. Didn't sell it, right? And then guess what happened? It went up. And he was like, you're an idiot. If I would have sold it, you're an idiot. I was like, great. I took cash and put it in our bank account and watched the market go up and just chilled. He goes into a state of thrill about how much money everybody's making. Everybody around you is making money. And then the end is when YouTube starts screaming, we're all going to get rich. Literally, the thumbnail said, we are all going to get rich. And it was like, right? That was, we talked about this when this happened, right? Once you get to here, you're not going to sell it. Because like, if something's making money, do you sell it? If your business is making money, do you sell it? Not really, you hold it. You hold it tighter. Wall Street knows you're going to do that. So once they get you to this point, guess what they're going to do? They're going to sell it. And guess what you're going to do? Not sell it. What's going to happen? The price is going to dump. This is, in the broader sense, this is May. Price dumped down to 30. What do we do? No, we're going to 400K, don't worry. They pump it up again. They bring it back again. All those people who wished they could have sold at 65, they were just wishing they could have sold at 65. It comes to 69. And I was like, sell it now, sell it now. And they're like, no, Sam, we're all going to the moon. We're in the rocket ship, right? Because you become complacent. The whole point is greed and euphoria blinds you and convinces you everybody's going to get rich. And actually, most likely, it convinces you to buy here. It convinces you to buy up here. And the prices go sideways because smart money's selling it. Then you hold it, because you're still euphoric, you're complacent. Then it dumps, you don't sell it because you're like, oh, well, I'm not going to sell it until it goes back up again, but I'm still anxious, but I still believe in it. Then you're in denial that, oh my God, I just went from 60 down to 30, or whatever, 20 at this point. And now we're going through the capitulative phase where you're terrified and selling it at a loss and running for the hills. So let's look at the actual charted version of this. This is what it looks like. These are the emotions charted. They never asked anybody a question. These are charted by computers, and the computers do not care about your emotions. They simply care about how much profit is sitting in the markets.
That's a good question.
Because they know that the profit sitting in the market is going to determine your emotions, right? Because we said like your emotions are tied to this like number on a screen, and they know number go up, emotion go up, number go down, emotion go down, and this is how black and white it is. What's the question?
The question is, where does all the information actually come from, and can we see also in the stock?
This is on the blockchain.
Is that what I?
Yeah. So all this information is being pulled from the blockchain.
Because it's all transparent. That's the power.
Yeah, exactly. Like the fact that blockchain's a bunch of computers with an accounting book running on it. We go read the accounting book and and draw it out into different data. It is not available for the stock market because the stock market is not transparent.
Regarding the previous chart, which point do you think we are in?
I know which part we're in.
I mean the previous chart about the economic cycles.
Oh,
The cheat.
yeah. Let's go to Shishi.
Yeah.
Go like right there.
And,
No. Maybe right now we dumped. Maybe like right here.
and regarding the role of cryptocurrency, how long does a cycle repeat? Because actually
2 years.
2 years. Oh, okay.
It's not 4 years. It's actually 2 years.
Okay, thank you.
These are great questions. Thank you for asking. Let's go back to the other one. This is how it's charted. Okay, this is the total unrealized profit and loss. Normally we look at the entity adjusted version of it, but it's going to take 14 weeks to load, so we'll go with this one. Capitulation happens here. This is the line. Above this is profit. Below this is loss. right? When you go below this line, that means people are selling at a massive loss. Can you click from here and then go that way? Oh, actually from here. Yeah. Click, highlight all the way. Yeah. Thank you. Toot, 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 toot. Okay, all right. This is what it looks like, okay? When the market's in a state of belief, smart money already started taking profits. Normally, if we look at the Ethereum chart of this, Ethereum would be all the way up in greed. It stayed in greed for some period of time. Greed is where greed means greed, you know? Like either you're greedy or somebody else is greedy. And usually somebody else is greedy and they take all your money. Now what's happened is we've gone down. Up here we were in a state of belief. This is what they do, right? This is how these motherfuckers play us, okay? Scare you to shit down here, don't buy it. Keep you fearful here, don't buy it. Keep you anxious here, maybe buy it, but probably don't buy it. Bring you into a state of fear, or a state of belief when we get to, what is this for Bitcoin? Like 20K? No, this is not even 20, this is like 30K. 25K, right? Price, 13, sorry, 13. From 13 until 70, keep you in a state of belief, because when you believe it, you're not going to sell it. Then dump it on you, put you in a state of anxiety to sell it. If you make it through that, bring you back into a state of belief so you don't sell it. Then keep you in a state of anxiety while they sell it. And then dump the thing and put you in a state of fear and put you in a state of capitulation and make you sell it at a lower value. Now, an even better way to look at this is the next ones. Because there's two separate emotional cohorts. There's the short-term holders, the people who they're tourists, they just came in because their friends were getting rich. And then there's the nuts people like us, who've been on this roller coaster for a very long period of time, and we're gonna die on this thing, right? There's short-term holders and long-term holders. This is what the short-term holders do. If you notice, it's mostly red. It's mostly losing money, right? Can you do the same thing, please? Can you zoom in from COVID, right before COVID? Yeah, right there. Yeah, it's okay, it doesn't matter. And it was so funny following this data, because it was like, okay, I'll explain. But the point is, sell at a loss, sell at a loss. Most of the time, sell at a loss. Stay in a state of fear and don't even touch it for most of the time. Barely come out of a state of fear at like 13, 14, 15K, and get just into a state of anxious optimism enough to buy it up here. And the moment it drops, go right into a state of fear and just start dumping it at a loss. Okay, this is how short-term holders play this game. Great. Market starts to pump. They're selling it at a loss, selling it at a loss. They go back into a state of fear where they're not even touching it. And then, and like literally right there, and right there, become optimistic. Literally right here and right here, become optimistic. This was hilarious. When we saw this, I was like, that's insane. Like the moment short-term holders were like, oh, I think this is a good place, boom, just sideswipe them, take all their money, destroy them, and teach them a lesson, okay? This is short-term holders. Now let's go look at long-term holders. Same thing. So let's go back here. Let's go from there. The long-term holder game looks completely different. They very, very, very rarely sell at a loss. Even during COVID, it's not easy to see, but even during COVID, they just barely went and like tapped the point where they would be lost and just came back. Yeah, this is COVID. When you do entity adjusted version of this, which is a slightly different way of looking at it, which is more truth way of looking at it. Actually, is this? This is entity adjusted, okay, yeah. So they actually just went like right next to losing, but they don't lose money, right? The moment it pumped a little bit, they came out of a state of fear and became optimistic. Because optimism, on the way up, it's optimism. On the way down, it's anxiety. They became optimistic and started buying it. Went into a state of belief down here before it even hit 20K, okay? And stayed in a state of belief and went into a state of greed here. Because greed is profit. Greed means there's a lot of profit sitting in there because they got in down here. Guess what they did up here while it was in greed? Kept it sideways for months and months and months while they dumped on us. The short-term holders were running in. I want to get rich. Grandma was coming in. They were slowly dumping on grandma and leaving. Okay? But they kept it in that range. Once they ran out of money to sell and they kept selling and kept selling, the prices drop. Can you please move the mouse? Then it goes back into a state of belief. They never go into a state of fear or panic or any of that. They went just barely back into a state of belief, pumped it again in a state of belief, brought it back, stayed in a state of belief while they're dumping on everybody. Became a little anxious here. Yeah, everything is collapsing and crashing. Sure, at that point they'll become anxious. And went down into a state of fear here and barely capitulated. Like barely, just took like a little loss. But now that we're down here, you know what happens down here? We all buy, right? So this is an easy way of being able to like see this objectively. Can we get you the mic, please?
So when you say that you are a long-term holder,
I'm not a long-term holder, sorry.
No?
No,
Okay.
but I'll explain.
just
I'll
thought,
explain.
okay.
Yeah.
You know, like, is there, or with your portfolio, your personal portfolio, so you have a long-term holding, then something that is a little bit more liquid, and then very liquid, or no?
I don't hold anything forever.
Okay.
I would show up in these metrics because I do hold for longer than 155 days. That's what these metrics define. I'm not holding anything forever. I'm here to get coconuts.
Okay.
I'm holding coconuts, right? My goal is get in just down here in this range, right? And get out up here
Okay.
in a strategic way.
So that means you're holding it back, then you're dumping when you see on Glassnode, okay, it's time to dump with everything that you have, and then
Everything.
you're coming in again and buying.
I'm not even making those decisions. I have a strategy that's laid out that tells me what I have to do. Because when I'm here, I'm like, we're going to 400K. And I read my paper and it goes, shut up, Sammy, you got to sell some. And I go, fuck, okay. And I just automate that process. I completely remove my emotions, completely remove myself from it. I have predefined in an unemotional state exactly what I'm going to do, and I'm just taking profits. And at some point, we get out completely. Like here, right here, I took 50% profits, and I put it into the markets here. So the amount of money I lost was 0, because 50 went down, 50 went up. Then here, I took everything out of the markets. Everything went to cash. Because by this time, the data, there's so much more data I don't have time to show you, but like, by that time, the data was clear, like, hey, there's a fake out going on. The money isn't there. Everybody wants to go to the moon, but there isn't fuel in the rockets, which is money. So at that point, I sold everything. I do not believe in holding anything forever, because my goal is to make more crypto, right? So how do I make more Bitcoin? Do I just hold one Bitcoin forever and I make more Bitcoin? That's fundamentally impossible, right? I do want to hold a Bitcoin until it becomes overvalued and I can have enough data to say, okay, this is overvalued and I know that. I'll hand it to somebody else and I will wait. I mean, I don't do it to people. That would be really rude. But you know, I'll sell it to somebody else, wait for us to reset and return, and I'll buy it again. Now, if, you know, what was it up here, like 50-ish is where we sold it. Now, when it goes back to 10K, I'll get 5 Bitcoin, right? You get 5 Bitcoin by not holding Bitcoin.
Yeah.
So do not hold things forever. This whole idea of like hodl and you're gonna get rich, this is exactly what they do, right? They take the past 10 years and they go, hold it. Hold it forever and you're gonna get rich. You're not. And you just think about this. I want coconuts on a beach while I'm 33. I'll hold it for 10 years. Then what I'll have? No coconuts, no beaches, and I'll be 43. And my knees will kind of start a little bit, right? Hold it for another 10 years. Guess what? I have all this money on paper. My knees don't work properly anymore though. Fuck you.
So
I'm just saying, the old world, you know, 40-year-olds used to like walk around like this back in the day.
So the data says right now we're going one more leg down, then it goes high, selling.
The reason why we're going one more leg down, I think, is because those cascades of collapses have still to complete, right?
Yeah.
The data says once every 4-year buying opportunity. That's what the data is saying. It doesn't tell you, are we going to go lower? Probably are. Great, buy more, right? Or make purchases in a staggered way, dollar cost average in.
See.
Once you run out of money, set your price alert where your break-even point is, coconuts. Because the point is maximize coconuts. Maximize
Enjoy.
coconuts. Because you know what I've been doing since year to here? Nothing. I've been off building businesses, building cash flow, because what we do is we take the profits and we put it into businesses that make us cash. And now we're delivering cash to people's bank accounts. Now the prices are low, guess what we have? Cash. Plus we have the cash selling from here. Now, when I sold it here, I was a fucking idiot as far as the world was concerned. Because they're like, the entire world saying we're going to 0 or we're going to 100, and you're selling at 50, 55, you're a moron. And then it went from 50 something to 70, 65. And I had to sit there and watch the lunatics all getting like insanely wealthy apparently. But I had cash, which gets me coconuts, right? And so we took that cash and we deployed it into business revenue streams, which are semi-in crypto / outside of crypto, real value generation mechanisms. And now they'll make us cash forever. And now that this process is coming to the other side, and it's been 6, 7, 8 months while we're setting up those things, we have monthly cash flow that we can feed into these markets forever, right? So the things I hold are businesses, right? Great question.
Perfect. Thank you so much. I
Thank you.
appreciate it.
Thank you. Oh yeah, so please join our Telegram group. You can reach out to any of our.
You can come to me.
Do we have the thing to scan?
Are we finished?
Yeah, it's we don't want to take up too much time. We got to head down to Ubud. In simple terms, make decisions because of data, not because of what you're being told, because what you're being told is the wrong thing. Know what you're buying, know who's running it, know what it does, know where the money's coming from, then put your money in. Then you'll probably keep 60% of your money, right? Then you probably won't lose your money on 60%. Still expect 20 to 40% of that to disappear because nobody makes perfect decisions. But that 60% will grow within the next 2 years to an insane level, and have a 4-year plan and join these meetings. What we're doing here is we're laying frameworks and the ground layer to guide you through this process of how do you build a strategy, how do you understand these different things. As things happen, we explain them and dive into them so that you become more knowledgeable so you can make these decisions. All this data, what we're doing is thank you for coming. Can we stop the recording?